Hello everyone, and this is Market Fatafat on ET Now. I'm Shrishti Sharma, and with me is Snehi Shah. And over the course of next 1 hour, we're going to be taking you through all the buzzers in trade right now, either on the back of the news flow or on the back of the technicals. We will connect with our technical expert for today, as well as our researcher. But before that, let's have a quick look what the markets are up to. So Snehi, not a great day coming in for the benchmark indices, but it's good to mark the kind of recovery that we are seeing, especially in Nifty Bank.
Absolutely, good afternoon to you, Shrishti, and good afternoon to all our viewers as well. Let's quickly take a look at what the markets are up to right now, and Nifty 50 managing to, currently struggling rather to hold on to those 23,400 levels. So we've slipped quite a lot since the highest point of the day, roughly 150 points lower from the day's highest point of 23,507 is where we are at right now. Sensex also trading half a percent lower. However, like Shrishti mentioned, Nifty Bank has been doing pretty well for itself. Right now it's 0.3% lower, but if you see the recovery, it's 1.4% higher from the day's lowest point, and the similar can be said for Nifty Small Cap and Mid Cap also, because good recovery coming in on both of those broader market indices as well. 1.2 and 1.1% respectively off the day's lowest point, and Mid Cap has also in fact managed to just tip over to the green. So let's see if it's able to sustain to those levels as well. Very quickly taking you through some sectoral gainers and losers today. Nifty Realty is the biggest sectoral gainer, 1.5% higher, and other than that all your sectors are in the red, led by PSU Bank, 2.4% lower, energy, media, metal, FMCG, auto, pharma and IT lastly, in that order from most to least losers in today's trading session. What's doing well for the Nifty? Power Grid, Grasim, Tata Steel, Hindalco, Ultratech. All of these Nifty 50 counters more than 1%, trading with more than 1% gain right now. However, on the flip side, it's the entire Adani group of stocks that's weighing on the market sentiment right now, especially Adani Enterprises and Adani Ports, two of the Nifty 50 constituents that are weighing on Nifty, followed by SBI Life, Britannia, SPI, IndusInd Bank, NTPC, ITC, ONGC. All of these Nifty constituents trading with cuts of more than 2%. But largely, this is what the market is looking like. Good recovery coming in for Nifty Bank, but 0.7% lower for Nifty is where we are at right now.
Well, certainly that's the construct of the market right now, but India VIX is actually flip-flopping between the red and the green territory, so that is something that we are watching out for as well. But with this, viewers, let's move on and let's connect with our technical expert for today. And on that front, let me welcome Ashish Kyal, who is joining us to highlight all the counters that are either giving the breakout or some of the breakdown candidates as well. And on the research side, Gaurav is here with us. A very good afternoon, gentlemen. But before I come to you, let me just highlight the first stock that we are tracking today, and that is IND Star. Because today Axis Capital has come out with a note where they initiated coverage with an ad rating with a target price of 356 rupees. What Axis Cap is saying that the company should deliver healthy performance after a tough few years. They see better rental revenue growth as Vodafone Idea kickstarts the network expansion and Bharti transitions to 5G. Now, reversals of Vodafone Idea's remaining doubtful provision, it has been paying 100% of the current and repaying older dues as well. And the peak capex for Indus is also now done. All of this should bode well for IND Stars, and the company should deliver healthy EBITDA growth and generate free cash flow generation, and this should help Indus reinstate dividend after 2 years. Now, the stock is already up on a YTD basis, trading at a premium of 10% versus its historical valuations, and Vodafone Idea capex has gathered pace, and there remains uncertainty around its debt raise as well. So headwinds are also there, but they await a better entry point and hence maintaining a target price of 356 rupees. And on the back of this news, this report, the stock is in focus today.
Okay, so stock is up roughly 1.5% amid a beaten down market. So Indus Tower is doing pretty well for itself. But Ashish, coming to you now, you've picked out Fortis Health for us on the charts last 6 months, or in fact even YTD basis. The stock is given returns of more than 50%. It's been a steady mover ever since then. Do you think this momentum for the stock is going to continue? Can we expect some more positive moves coming in? And what are the levels that you are spotting for this one?
Hi, afternoon to you and all the viewers. If you look at Fortis Healthcare, we can clearly see the stock is trading at 52-week high. Today's volume has been exceptional. As you watch, it has been about the entire month of volume. That shows the upside move is along with supported by the volume, which is a positive sign. So any dip from here towards the level of 675 can be used as a buying opportunity for Fortis Healthcare, and we can then expect a target of around 720 on the upside. On the downside, one can maintain a stop loss of 650 levels.
Okay, 720 on the upside is what Ashish is viewing for Fortis Health. Let's move on and shift focus to another stock that's in focus, in fact, and it's been deeply under pressure ever since the opening bell, and that's AIS Logistics, because AIS has recently filed a draft red herring prospectus with SEBI for the IPO of AIS Vopak Terminals Limited, which is a joint venture with Vopak. Now, in the conference call, the management noted that the IPO comprises of a fresh issue of equity shares up to 3,500 crore rupees, and the IPO proceeds will be used primarily to reduce debt. Motilal Oswal estimates a 13% CAGR in EPS over FY24 to FY27. However, they note that the current valuations of FY26 PE of 36 times and price to book of 5.6 times look expensive for the stock. Hence, they maintained a neutral rating on the stock with a target price of 795. And on the back of these expensive valuations that Motilal Oswal is noting for this firm, and also that the primary use of the IPO is going to be debt reduction, the stock is beaten down in today's trade, 4.6% lower as we speak.
All right, that's about AIS Logistics. But moving on, and Ashish, once again coming to you, Nalco is one of the shining stars in today's trading session. Take us through how is the technical setup looking like for this counter?
Yes, if you look at Nalco, it has bucked the trend, and within the metal space, this stock is touching 52-week high compared to many other stocks, and that shows the inherent strength and relative strength in this stock. So overall trend for Nalco is positive. It managed to bounce back from its 10-day average as well, and we can expect the stock to reach towards the target of around 275 on the upside, and on the downside, one can maintain a stop loss of around 240 levels.
Okay, so those are the levels to spot out for Nalco. Gaurav, coming to you now. You've picked out SWIY for us. Tell us why this stock has made it to your radar. Recently listed company, it's been drawing a lot of attention. So tell us why you have picked up this stock for us today.
He is in focus, and the reason being that now Motilal Oswal has come up with their research report. What they're saying is that they believe that Zomato is now a market leader across the food delivery, and they have actually maintained this market leadership. But what they have also said that SWIGY has a potential to bridge the gap. So when we talk about the market share, Zomato currently holds around 58% market share in food delivery, whereas SWIGY currently holds 42% market share. But on the other hand, when we talk about take rate for SWIGY and Zomato, SWIGY has a higher take rate of around 25%, whereas Zomato has a take rate of around 24%, which is on a positive side for SWIGY. Other than that, what they are saying is that when we talk about quick commerce segment, now Zepto has actually somewhere taken ahead of what we have seen for SWIGY. SWIGY has their own platform called Instamart, so Zepto has around 29% market share right now, while Instamart has around 25% as per Motilal Oswal's research. But at the same time, what they are saying is that we may see some further positive coming up in terms of food segment for Zomato and as well as SWIGY, and that is the reason why SWIGY is in focus now. That when we are talking about the stock performance also, it is up in trade today, so definitely watching out on SWIGY on the back of the report from Motilal Oswal.
All right, then moving on, and urban demand slowdown seems to be temporary, says Morgan Stanley's Rhythm Desai, and he sees opportunity in discretionary consumption as income levels continue to rise. Quick commerce will be one of the leading spaces. Let's go across and listen into his take.
Coming out of COVID, rural India took longer to witness the transfer of terms of trade from urban India, but that is now set. And therefore, I think consumption will actually see all-round recovery. The slowdown in urban consumption that a lot of consumer companies are complaining about, I think is temporary. Now, within consumers, though, you have to be a bit more nuanced, because there are certain companies that are running into stiff competition. Their moats have been diluted, and there are other companies that have very strong moats. So, to my mind, for an investor looking to pick stocks, you have to assess the moat of that particular business. And any business that is subject to intensity of competition will not deliver the growth that you need to make money. So that's the nuance in consumer. Also, the second thing is that because India's per capita income is rising, discretionary consumption will grow much faster than staple consumption. And I think we are only seeing reiteration of those trends, whether it is with respect to quick commerce, whether it's respect to leisure, travel, education, entertainment. I think these areas are certainly going to grow faster than soaps and staple stuff.
Okay, that's the word coming in from Morgan Stanley's Rhythm Desai. But on that note, viewers, we'll slip into a very short break, and we'll bring you more buzzing stocks on the other side of this break, so you stay tuned.
Welcome back to Market Fatafat on ET Now, and building on to the success of its Jan Nivesh campaign to promote mutual fund awareness, Mutual Fund Sahi Hai announces the launch of its new initiative, Smart Nivesh, Sahi Nivesh, in partnership with Times Network. As of October 2024, the country has a total of 10.12 crore SIP accounts with 25,323 crores of accumulated in SIPs during October alone. Now, this trend underscores the increasing recognition of mutual funds as being vital for financial wellness. Over the coming months, our campaign will aim to simplify and clarify mutual funds, offering expert insights, practical tips, myth-busting information and innovative strategies to meet the diverse financial needs. Stay tuned as we embark on the enlightening journey together.
We all harbor dreams. A dream as big as a home to call our own. A dream as simple as planning our children's future. A dream as wishful as living a life of comfort in our twilight years. Achieving these goals is within reach by making smart investments and right choices in mutual funds. But which mutual funds are right for you? Which categories might better align with your goals? We are here to dispel myths and help build your confidence to achieve your dreams through mutual funds. Mutual Funds Sahi Hai presents Smart Nivesh, Sahi Nivesh, partnered by Times Network. An investor initiative where experts guide you on making smart and sahi investment decisions. हर जरूरत के लिए mutual funds. Smart निवेश, सही निवेश.
Okay, well, on that note, Ashish, let's keep it going with all the stocks then. You've picked out Power Grid for us on the charts. Last 1 year, 54% uptick is what the stock has seen. Good return over the last 1 year. Tell us if you see this momentum continuing for the stock going ahead, or now can we expect some consolidation on the charts? And either way, tell us what levels you are also spotting for this stock.
If you look at Power Grid, we can see that the stock has found multiple support at 310. There were 3 to 4 attempts to break that level from where it has reversed now. On the upside, that shows a positive sign, and I think from here the stock can move towards the level of 340, 345 over short term, and one can maintain a stop loss for the stock at around 310 levels.
Okay, so that's the levels to watch out for Power Grid. Thanks, Ashish, for that. Let's move on, talk about another stock that's been under quite some pressure since morning, and that's Britannia Industries. Now, the company's share price has declined to over a 6-month low today as Food Safety and Standards Authority of India, which is commonly known as FSSAI, has asked the company to prohibit the sale of one batch of one of its products. The notice came after the Food Authority noticed that Britannia used preservatives above the prescribed limit in the mentioned batch of the product. The authority sent the notice post quality analysis of the sample of the product, and this is according to an exchange filing that the company has filed with the exchanges on Tuesday. Britannia did not disclose the name of the product, however, but it's a negative news flow coming in on the back of the product non-compliance that Britannia has showcased and over the use of this extra preservative. But on that note, the stock is down 2.5%.
Alright then, moving on, and Ashish, talk to us about Brigade Enterprise then. How do you spot this chart on the technical front?
See, Brigade Enterprise has been moving in a broad range since almost a year now. But however, if you look at the stock, almost 6 months now, it has been going in a range. But however, it has now bounced back from the lower end of the range, which is around 1100 levels, from where it bounced back sharply on the upside. And the upper level of the range comes to around 1400, 1450. So we can expect it to again go towards the upper end around 1400 levels from here on. And on the downside, 1135 can be used as a stop loss. The risk reward looks very appealing for long positions on Brigade Enterprise.
Alright, that's about Brigade Enterprise. Risk reward looks quite favorable at current levels. But moving on, let's put the spotlight on the steel counters then, because today JP Morgan has come out with a note where they are highlighting that India's coking coal imports and domestic coking coal production growth slowed down in the first half of FY25. Now, slowdown was due to a combination of factors. That was steel production disruption was seen, inventory correction was there, as well as election-related slowdown and monsoon impact was also visible. Now, India is now importing a substantial share of the coking coal from Russia at a lower price, and they believe that Indian steel prices have found a floor. Now, meaningful uptick looks like unlikely in the near term, and the steel makers could continue to optimize the coking coal cost by diversifying their suppliers. As of now, they do prefer JSW Steel and Tata Steel, but they remain neutral on SAIL as well as Coal India. So on the back of this report, the counters are in focus, but nevertheless, steel stocks as well as a couple of aluminium stocks are also shining bright. Look at the move in Tata Steel, which is holding on to the gains of almost 50% right now.
Okay, so good moves coming in on Tata Steel right now, but Ashish, you've picked out Dixon Tech for us. Now, talk to us about this stock, because very interesting price movement coming in for this stock. It's been a one-way rally coming in. Year to date also, this stock is up more than doubled in fact. Tell us now, is it time for some slowdown, because it's been a one-way rally coming in for this stock, and what are the key levels to watch out for?
Yes, absolutely. If you look at Dixon, it has outperformed the broader IT index also, where Wipro, TCS, Infosys have been struggling. This mid-cap stock has outperformed sharply on the upside. So there is no slowing down as of now. We can clearly see the stock is again, after rallying, showed some kind of a dip, which is an opportunity to buy into the trend. And we can expect a target on the stock around 16,000 levels on the upside, and one can maintain a stop loss of 14,500 on the downside.
Alright, that's about Dixon Tech, but with this fears, it's once again time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere, we'll be right back.
If you like this video, then like, share and subscribe to ET Now.